All right, welcome everybody. Welcome to the closing beat. Happy Tuesday. Hope you're having a good day so far and a good week so far this week. This is our quick update that we do as far as the stock market goes. We cover everything, the good, the bad, and the ugly that happened throughout the day. And all we ask is that you keep us in mind here at Jazz Wealth. We're a teaching financial advisory firm. So if you have an account somewhere else and you're like, I don't get any help, I don't even know, there's nobody there for me. Well, we're basically the same thing, only we teach, we help, personal service, and of course the advice and everything that you need along the way. One of the things that we do, if I could share with you real quick, is in the dojo here. These are videos that we do just for our customers. We got another one coming up this Thursday. And so these are available going back to the start of time for all the different topics and things that we cover here. And also, now when our customers log into the dojo, they can see, just like I have here, the markets, how we're, you can look up individual stocks and kind of follow along. You can look through the different sectors and see how things are performed and kind of geek out on that a little bit. So that's what we're here for. We just hope you'll keep us in mind. And if not, maybe you'll hit the subscribe button. Why do I feel really short today? All right, let's cover the markets here and see what's going on today. So you got the market started higher. Everything was good. We had a rally in Europe overnight. It was sort of exciting and fun to watch if you like that sort of thing. Germany had a good little rally. They needed it. And so we started higher. The markets were basically higher all through the morning. And then as we get into the mid-lunchtime there, everybody starts taking a little bit of a break and the market starts selling off. Well, you can see it in the bottom hand right side of your screen. You can see right about lunchtime just, we're losing a little bit of steam. Now, historically, the markets are, they do flatten out a little bit the day before a Fed announcement. And that's what we have tomorrow. We got the Fed meeting starting today and the rate announcement coming tomorrow. I've got some stats for you on that here. But basically, that's what happened. People just taking a little bit of risk off going into the Fed meeting. There is literally a 99% chance that nothing happens tomorrow. That's not my opinion. That is the actual stats, 99% chance that there will be no rate change. And Fed days, which are tomorrow, are historically bullish. So I went back and ran some numbers here for you. The average percent change for the Fed, for the S&P 500 when the Fed leaves rates as is 0.28% gain. The S&P 500 gains an average of 0.28%. Let's call it a third of a percent going back to 1994. The average percent change on Fed days only, meaning the day of, which would be tomorrow, is actually 0.5%. So a little confusing, but the Fed meeting spans 2 days. So if we take the 2 days and we say, what's the average market return in those 2 days is 0.28%. If we say, okay, only the second day when they announce the rate decision, what's the average performance then? Well, if they hold rates and they don't adjust them up or down, the average return is 0.5%. Went a little bit further for you. March. This Fed day happens to be happening in March. We thought, hey, what about, does the month have anything to do with it? Well, if you only look at the March performance of the markets on the Fed days, it is positive 68% of the time. And 1 month forward, meaning the rest of March and into April, average gain is just about 1%. So it gives you an idea what to expect, because tomorrow's Fed announcement is going to probably be kind of boring. 99% is what they're 99% of investors are expecting that they don't do anything. So it may not be much to talk about going into tomorrow. So anyways, let's dive in here. Let's take a look. So you got the S&P 500 breaking above the resistance area there. We drew it as just a simple little line on the charts. Still looking good. Very solid move, but today did give back a little bit. I maintain that if the markets pulled back, I said it back over here too, if we pulled back, it's not a big deal. Right? It would be totally fine, especially if we pulled back in here. You now know that statistically it should be a bullish day going into tomorrow, or typically is a bullish day. Doesn't mean we have to have a massive rally, by the way. But 68% of the time we're going to be positive, so at least now you know. And so that's the S&P 500. We take a look into the different sectors of the market. Semiconductors, they have all the excitement again, adding just over 1%. Why weren't the markets much higher? Well, financials. They couldn't get it done. They poked above the 200 yesterday, driving everybody crazy today by coming back towards it. Didn't close below it, by the way. And we always say you need the semiconductors and the financials to work together in order to get anything done market-wise. So semiconductors kind of standing out as one of the better areas of the market today. Also, consumer discretionary. Sort of misleading today, but consumer discretionary a little bit stronger here on the day as well, poking to new highs for the year. Great little rally there. A lot of it had to do with Ford. Ford had a good day, added 1.5% on the day. They're going to increase the production of the Expedition and the Navigator by 20% at their plants this summer here. So got a little bit of a boost today. You got about, well, if we look at the consumer discretionary area, from here to the all-time highs, get ready. I don't know if you've seen any of this on Bloomberg or whatever, where all of a sudden everyone's going to start saying, you know how people say it was the best day since November, it was the biggest drop since March, right? That's the common thing that everybody likes to focus on. I'll bet you the next thing people are going to start doing is going, we are now so many percent from hitting the all-time high in consumer discretionary or whatever. Nonetheless, 5%. So we got 5% to go until we hit all-time highs there in consumer discretionary. All right. Individual stock news. You got Boeing actually did not weigh on the Dow. So we've been saying here, you got almost 500 points so far this month that Boeing has held the Dow back. That's how aggressive this decline has been. Anyways, the stock was basically flat on the day. It did end up gaining a little bit. CEO put out a video talking about what they're doing, how they're working through everything. Canadians are looking into re-examining the 737 approval. China said it's considering the trade deal without the Boeing aircraft in there. So sounds like a lot of bad news. All in all, it was a pretty good day for Boeing. Tesla continues to move towards the lower end of the downtrend. Pointed this out to you. There's no excitement, no hurry, no anything. Nobody wants to participate until we get a little bit further lower. Let's call it 250 for now. That's the magic number. It's not my opinion. It's just now very obvious on the chart that that's what everybody's looking for. Today, more drama between Elon Musk and the SEC. The SEC wants to hold him in contempt, or wants a judge to hold him in contempt because he did not get approval for the tweets that he sent out. And he's saying, hey, I didn't say anything in these tweets that's like, you know, stuff that I was saying before. I shouldn't need approval. But you did agree that you would get approval before you would send out the post or the tweets, right? So if you agreed to something and now you're going back on it, doesn't the SEC kind of have a case here? Or not a case, but like a reason to be a little frustrated? All right. Netflix, about 1 1/3% lower on the day today. They're not going to work with Apple. Apple's expected to launch their new sort of streaming service coming up next week, actually. And Disney said, we're not participating. And Netflix says, we're not participating either. We'd like people to watch on our site. I mean, come on. So would I, right? FedEx. Reporting earnings after the close here. We talked about this yesterday. Horrible earnings, by the way. Missed on earnings, missed on revenue, guided lower. Global or international sales being some of their focus. They are sort of confirming what we already know. Remember, earnings is not now. Earnings is last quarter. So if you're brand new to how this all works, when the company reports their earnings, they're not saying right now. They're saying the previous quarter, which is their third quarter. We'll do it another time. But we're talking about their previous quarter, which is essentially last year. So all the concerns about the slowdown in the economy, Germany, China and such, these guys are just confirming, going back into that. We have now worked our way out of that with rallies across the board around the world. So go back to Friday. We did a whole overview of the world, and I'll do it again this Friday. So we already kind of knew that. I think the stock is getting hit a little too much here if it's still down about 4%. I didn't look. But now you know. They missed on earnings, missed on revenue. They guided lower. So pretty interesting there. Now, the markets. Let's talk about this. You got the S&P 500 sitting at highs of the year. We know, not opinion, we know that $44 billion left the 401k market in December. December alone. That's just December. We know that a lot of those people are still sitting there saying, well, when the market pulls back, I will buy. Think about this. Look at the chart. This is why it's a tough time to try to buy these dips. You now need the markets to fall over 22% for you to have made waiting worth it. Those of you saying, I'm going to start investing when the markets fall, you need a 22% drop. Those of you that waited through the end of the year and said, wow, I'm glad I didn't get started investing, you now need a 22% decline to make it worth it. Think of the psychology there in that mindset. Now, granted, along the way, we've certainly had people say, okay, I'm diving in. I can't take it anymore. I missed out on the first 10%. I'm not going to miss out on the next 10%. Think about that. So as we pull back, do you think there'll be a huge amount of sellers? Or do you think there'll be people saying, oh, thank goodness. Well, I'm not going to get to buy at the lows. At least I got a 5% decline. At least I got a 10% decline or something like that. So think of the psychology of investors and traders in there. It's definitely been a rough one. I can say that, so I track everything. You guys probably know. Since the beginning of the year, I've done 348 calls. The most common question that I get is, or sort of comment is, I'll start investing when the markets pull back. You're still waiting. And you need, now think about it, when the markets fall for 2 or 3 days, does that really cut it? Because you waited and you missed out on all that gain. So you'd have been better off just buying in the first place. You now need the markets to essentially collapse to make waiting to invest or waiting to buy the dip effective. Now, to take it further, I'm going to do a class. I need about a week to go on this one. It's probably just going to do it for our customers as one of our wine and wealths. Maybe I'll make this one a public one and you guys can all join in. I'm going to do a class and use the data. I don't use opinion here. I only use the data to show you that even if you were psychic and you actually knew the exact bottom of every pullback, meaning this December bottom, let's say the bottom that just happened there in March, right? That little pullback. Even if you knew exactly the penny to buy that bottom, then let it rally, let it pull back, buy that bottom, and so on and so on. Do you know you still wouldn't beat dollar cost averaging? Not a chance, right? Well, there's a 3% chance that you would beat it. But even if you could pick the actual bottom, you still wouldn't beat just averaging in over and over and over again. And I know that's going to spark some questions. People are going to go, how is that possible? If you knew the exact bottom, wouldn't you beat them? Nope. So even if you were psychic and you knew, that's the class that we're working on. So we'll see how it goes. Hey, anyways, if you have some questions, I'm happy to answer questions for you as we wrap up the class here today. As far as earnings tomorrow, General Mills, remember that was our chart of the day the other day talking about a possible breakout there. It's not going to do anything until earnings. Well, market's closed now, but they'll report tomorrow, so we'll naturally talk about that one as well. Guess, if you're into that, the clothing store, Guess is going to report, and Micron. Micron will be a big one, so we'll definitely talk about that one when they report after the close tomorrow. Yeah, they report after the close tomorrow. Also, I'll point out Tilray. Tilray sold off today. If you guys are interested in that, they missed on their earnings. Missed on revenues were a little bit better, but we talked about this yesterday. They missed, and so the stock was a little bit lower. Yep. Morningstar asking about the Fed tomorrow. Any thoughts on the Fed? Just a little bit ago, I actually covered all the stats on that. I'm going to go with the stats. There's a 99% chance that they don't change rates, and the March Fed days are positive 68% of the time. And then I covered some more data. You can check that out there if you like. Disney, a little bit lower on the day as well, breaking through the 200-day moving average. They said they're not going to participate, right? Disney's doing their own thing, their own streaming service. I don't think it's quite out yet. But anyways, so stock selling off a little because they're not going to play along with Apple. Plus, you got to remember, was it today? I'm sorry, I didn't look that up. Their deal finished with Fox. I believe their deal is officially closed with Fox. There should be some new trading symbols, new ticker symbols. So that deal closed today. Part of that's going to be that deal closing as well. Sorry about that. I didn't see that one. Dollar cost averaging. Interesting there. Nice. AMD a little bit hot. Well, nice day today actually for AMD. Semiconductors today. You see that great little spike in semiconductors? Let's see what we have here. My little guy isn't updating. Come on. Come back to AMD. help me out. So new yearly highs there on AMD. Nice little move. All kinds of little bitty news in there. Looks like I got an analyst upgrade there today. Cloud gaming's going to be huge for them. We don't know officially. It looks like it's just a rumor at the moment. Google's working on their own gaming setup, and it looks like it's reported here that AMD won the deal to work with Google. I don't know. It doesn't. There's nothing official that I can see, at least at first glance there. I don't want to take too much of your time. It looks like it's just a rumor at the moment, and investors believe it because it's up 12%. So nice. Brandon Atwood. Yeah, we did that. So we did a video for customers a while back to show what if you invested at the absolute top of every single market, and it shows that you'd still be okay. So it's the same thing. We're reversing it. Yep. Dollar cost averaging is boring. Now, I kind of go with a hybrid here. I say you dollar cost average, and when the markets dip, you just increase your average. Right? That's fun because then you're engaged, and who cares? You're saving a little bit more than you thought, so are you really disappointed? But if you say you're putting $50 a week or $20, whatever it is, $50, and then the markets start falling and you go, ooh, that's pretty scary. Let me do 60. Let me do 60 a week and just add into it that way. I love that. Yep. 28 Dren, he says, why can people like Kramer suggest stocks, but I can't suggest stocks? Kramer is not officially registered in any way. He was. He used to run a hedge fund way back in the day. And so he actually, at some point, he did an interview. He was talking off, not on CNBC, about his voicemail. Maybe it was on CNBC. He used to say on his voicemail for his, he was managing money for customers, he would say on his voicemail things like hot stocks. So he'd say, I'm sorry I missed you here real quick. By the way, get a minute and check out symbol XYZ. I think it's really great. And then he was asked not to do that because it's not suitable. Suitability rule is the big key there. We're not allowed to make suggestions for registered investment advisors, brokers, people that are in the business and registered as such, because I have no way of knowing if it's an actual suitable suggestion for you. You may be investing your last penny. You may bet it all on one symbol that I suggest. I'm supposed to know the people that I suggest stocks to. Now, when it comes to customers on our Thursday night classes, I know all of them. So I can suggest when something is good or maybe not so good. Different story there. Yep. Oh, sorry, I'm way down. Javelian. Yeah, so Thursday nights. And normally on the Thursday night class, Javelian's just saying, hey, also, I'm curious why you can't make suggestions. On our Thursday night classes for customers, absolutely, I can do that. And I'll usually stay late if you guys have questions on those to do that. Yep. Actually, if you look at Kramer, he is perfectly average, which is really good, by the way. He's great. I'm not saying he's bad, but he's actually average, which means he's really good. You are not supposed to beat the stock market more than 50.2% of the time. That number's been quantified up, down, left, and sideways. So if you can get, let's say you are getting more than 50.2% of your trades correct, profitable, winning trades, and you're active or you're actively making suggestions. If you could do better than 50.2, it means, yeah, you're average, but you're better than average as far as the markets go. So I believe the last time somebody calculated, he was at like 50.9, which people gave him a hard time for and said, oh, you suck. You can only get half of your trades right. He's supposed to. He did better than most people could probably do. So I think it's unfair, the kind of grief he gets for that. Yeah, I don't watch him actively, but I just thought I'd point that out, give him a little support. Maybe he'll come on the show, you know. I don't know. Okay. Hey, we can't get them all right, man. I know some of the calls over the years can't be perfect. Okay, well, hey, that's enough of your time I've taken for it today. I appreciate you guys stopping by and paying attention to the show today. We will be back tomorrow. Yep, tomorrow's Wednesday. We'll be back. It's Fed Day. I'm excited to cover that for you. I'll have all the stats and everything. We'll do it again. If I helped you in some way, maybe you'll hit the subscribe button. I really appreciate that. If you're not a customer, See, if you're a customer, I can't tell you to leave a review. If you do, it's up to you. I just can't ask you. If you're not a customer and I've helped you in some way, maybe you'll leave a review. If there's room for improvement and you think that we could do better or there's something you'd like to have better, I wouldn't mind hearing that as well. Just be honest. That's all I ask on Google or wherever people go these days. And we'll talk to you soon. Enjoy.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.